Hello, Turnouts, and welcome to this daily market commentary for Friday, the 30th of August 2019, the last trading day of the month, and quite a day it will turn out to be, particularly on the FX side. To start the day off, we had a softening in tone from the Chinese with respect to the trade war, which has seen a general bounce in global equities. That in turn has seen gold back off down to the 1525 announced level, and also seen the US 10-year rise back above 1.5%, up to 1.52%. For FX, I was an expect to start the day. Dollar making some small gains with euro down to 110.40, but dollar yen has struggled to make headway past 106.50, dropping back to 106.20 to begin the US day. Aussie quiet at 67.30, and cable at 121.85. Still plenty of Brexit headlines and backlash to the decision to keep the UK Parliament effectively closed until mid-October. What the final outcome will be is anyone's guess, but still plenty of discussions to be had along the way. And our beloved crypto market has seemingly stopped the rot from Wednesday's sell-off, with Bitcoin edging slowly back up to the 9600 area. So to get to the US day going, we have some Canadian Q2 GDP data out, which does come in a little better than expected, at plus 3.7% against the market looking for 3%. Dollar CAD immediately drops from 132.85 down towards 132.60. Equity markets take Europe's lead, with the Dow Jones opening higher by over 140 points. But for FX, it's all fairly quiet. The last trading day of the month can be a bit of a weird one for FX, as many corporate and institutional players like to adjust hedges based on the WMR 4 p.m. London fix. And I'm sure there's plenty of you that are probably asking me, what on earth is that? In very simple terms, there's actually a fix held every single day at 4 p.m. London time, which equates to 11 o'clock New York time. It's varied a little bit on how it's calculated over the years, but essentially it's a 4-minute window when a very large amount of orders are transacted, and an average rate of sorts is calculated from the rates traded predominantly on the interbank platforms, and then that fixed rate is the rate at which all orders that were set to be traded at the fix, if you like, are settled at. So, as I said, happens every day. Some corporate institutions like to hedge each day and use that as a reference rate, if you like. Some choose to do it all on the last day of the month. What it effectively does is it takes out the discretionary aspect of hedging, so there's not too much, well, I think it's going to go up, I think it's going to go down, etc., especially for corporations and institutions as well. It takes that discretionary element out and just say, okay, we're going to do it at that rate, whatever it is, and we'll come back next month. So that can see some fairly large flows in the last day of the month. And today was going to be one of those days when the fix certainly had its effect. In general, it seemed to be a US dollar buy fix. We saw euro dropping from 110.35 through the previous low of the year, around 110.26, 110.27, down to a low of 1.0964. I'm not going to attribute all of that to the fix, but obviously there were a lot of stop losses triggered below 110.26, and then some momentum sellers coming through. But we hit a low of 109.64 pretty quick. Dollar yen bounced from 106.15 to 106.40. Sterling, which actually had a bit of a bounce prior to the fix, up to 122.20, dropped all the way down to 121.40. And dollar CAD, which had earlier benefited from stronger Canadian data, squeezed all the way from 132.60, as I mentioned earlier, up to around 133.30. Good to see some movement finally for the most part. The dollar is on the rise. Stocks initially gave back all their gains, but then do a bit of a U-turn, which sees the Dow Jones and S&P turn green once more. Slight bounce in US interest rates is enough to see gold do some earlier gains, trading down to a low of 15.17 an ounce. As we head to the equity market close, the dollar gives up a little of its earlier gains. Equity markets closed mixed with the Dow Jones and S&P, both registering small gains, but the Nasdaq down, albeit by less than 0.2%. Overall, a good day for the dollar, especially against the euro. Even with an ongoing trade war and a dramatic reduction in US yields, the appetite for US dollars is clearly there. The question is, will Friday just be a distorted day due to month-end flows, or are we seeing the beginning of a concerted dollar rally into the end of the year? Who knows? But the break of 110.27 is certainly an important technical event for euro dollar, which is why I will turn my little technical piece here to finish off with on euro dollar. We've sort of looked at this chart before, but now has more relevance probably because we have broken lower. As you can see from the daily chart, a clean break of the prior low, which was here 110.27, as you can see, just over there on the right hand side of the chart. Has opened up from the day to a low of 109.64, but as you can see, the next major support really doesn't come in until 108.39, 108.40 area. So there's quite a lot of room to the downside. And below there, you really have to go down as low as 105.68 to get some meaningful support, and then there's a few more mini support levels below there. Euro has not exactly been volatile this year. Moves have been fairly slow, so it might be a little bit wishful thinking to think we're going to get a very quick drastic move down. But a new low on the year certainly caught people's attention, will have caught investors' attention. And the other thing as well, I think of importance, is if you look at this blue line here, which you could really argue has been a downtrend for euro since November of 2017, really. I know we had this spike up here, but once we've hit April 2018, certainly, even though it's not a perfect channel, it's fair to say we have been in a downtrend, and Friday's moves have only sort of gone to confirm that. This downtrend line here, should we break out the bottom of that bottom at the moment comes in around about 109.15. You might see an acceleration through there. There will be definitely plenty of technical people looking at that level. So something to keep an eye on. And of course, very short term, you would expect any rally back up towards 110.30 to be sold. Because obviously that was around about the previous low of the year. And with that, I shall wish you all a very happy end to August. Hope it was a good trading month for everybody. Just as an aside, please note Monday is a US holiday, which is where I'm based. So I shall be firing up the barbecue one last time, and maybe even trying to convince myself that my golf swing is still in order. And normal reservist will begin on Tuesday. Good luck for September, and we'll talk to you soon. Cheers.